Hello, welcome back to my YouTube channel. Today I'm going to analyze forecast next week gold forecast for your next week gold trading. So you can join with my gold trading community. Telegram link is below and join with it. I'm in a 4 hour chart. Technically picture this trend line now break out to the downsides. This is just a technical. So with the 4 hour chart technical, so breakout now this trend line to downside and retest on Friday. Now I am in sell side goal next week. So I have a reason. What are the reason for I am on sell side? So next week Fed forecast to the cut the rate in 25 bps 0.25% rate cut forecast on the next week FOMC meeting. So more major economic event is there next week, that is the FOMC meeting. So that's the Forex factory next week Wednesday. That's the Fed forecast to cut the rate in the 4.5% to 4.25%. That's the 25 bps cut forecast to the market. So next week, that's the interesting things is last week's inflation report increased to 2.9%. 2.7% is the previous one, and the increase to 2.9% is still inflation increase. So 2% is the Federal Reserve American Central Bank's inflation target, is still not target, is still inflation increase. So Fed forecast to cut the rate on the next week FOMC meeting. So I am thinking this rate cutoff already priced into the market. So I'm going to the Fed watch tool. So website, this is the Fed watch tool website. This is the next FOMC meeting 25 bps cutoff 93%. So you can see 93%, almost 100% price into the market this cutoff. So Fed cut the rate 0.25%, but not so dollar sell off. That's the goal will drop to the downside. That's my forecast next week. So this rate cutoff already priced into the markets, not dollar sell off, but gold not push to the upside. I am hoping gold drop to the downside, but Fed cut the rate in 50 bps. 50 bps not priced into the market, that will impact to gold push to the upside. So 0.5% rate cut will happen in next week, that will impact to the gold push to the upside because of 50 bps cut off next FOMC meeting not priced into the market. So that's the interesting major economic event is there. So this is the technically support level with the forward chart. This is the 3620 is the support level. So this level breakout in next week. So that's the your sell opportunity in the next week. 3580 is the this level breakout next target with the technically picture for our chart. This is the next support level 3580 level. So that's the technical picture says in the 4 hour chart. So I'm going to the 1 hour chart. This is the 1 hour chart. So the 1 hour chart, last week gold made new all-time high price 3675. This level is the 3650 level. This is a psychological level and the maximum pain level. You can see price several times tested this level last week. This the first point and this is second point, and this is the last time also last Friday again tested this level, not break out this level, still not break out. So this level not break out, that is the sell opportunity in gold next week with the 1 hour chart technically set up. So that's the interesting things. Sorry. So you have a this level is the important 3650 level is the important next week. This level not break out. This level, this point price section is the more important next week. This level breakout like this, that's the next target is the 3675. So not breakout, that's the below target is the focusing. 3620 is the first support level with the technically set up with the 1 hour chart. So that's the next week. With the interesting thing is the FOMC meeting is there. So Donald Trump wants to cut the rate immediately, but Powell wants to hold the rate. So still inflation increased. So this daily chart. So last week price holding in these levels 3650 3620 level is the next week ranging level. Last week price ranging in these areas. So I am hoping not geopolitical tensions. So if geopolitical tension impact to the gold can be pushed to the upside. Remember, I am always telling this. So gold is the safe haven asset. So geopolitical tension can be gold demand to the upside. So thank you very much.